Hello, it's Adil bringing you into market analysis review of the FTSE 100 for the Tuesday's price action, 6th of January 2015. Okay, right, okay, let's sum this up. Okay, basically we start off in the morning, okay, and we have the Shanghai positive, the Nikkei down 525 points, almost 3%. We have the Hang Seng down as well overnight. Okay, so we start off negative in Asia. Now, to a large extent, Asian markets had already priced in the bad news, given the fact that the US markets are sold off, and the FTSE obviously had gapped down. Okay, to a large extent. Having said that, you can't ignore a sell-off of 1% on the Shanghai, and obviously the Hang Seng, and obviously 500 points on the Nikkei. So that's something that you can't ignore. Okay, now obviously we had the Athens Stock Exchange down almost 5.5%. To a large extent, that was already factored in as well, given the futures market, and obviously that's something that we already know now. It's not new news, okay? It's something that we already discount, we take into consideration, okay? And then obviously you have the European, the French, German, and I'll discuss all those as we go along, okay? Now, with regards to the FTSE 100, okay, so we basically start the day at or around the 6400 level. Obviously the markets had sold off the day before. Now, given the fact that Shanghai was positive, that was a potentially bullish sign. Okay. Given the fact also that we had some economic data out overnight, so if I just bring this and drag this across, okay, so we had Brexit fears, we already know. We had global growth concerns, we already know. Okay, and that's basically been the main culprit for the sell-off itself. Now, we've had talk of obviously Germany having exposure of almost up to 24 billion in terms of loans that may well become unpaid, and maybe part of this so-called Greek haircut that Mr. Tsipras is insisting on, which is obviously is a part of the Syriza party. So that's certainly a concern as well. Obviously, if Germany has an exposure of 24 billion, that's not exactly bullish. Okay. So that's something that we certainly need to take into consideration, and obviously that can be interpreted as being bearish news. Now, what happened in the morning, basically, or what happened overnight, is when you have bearish news flow or fundamental news flow that's considered to be bearish, and that's then negated by potentially bullish news flow. So, as you can see there, HSBC, Chinese data came out better than expected. Services and the composite both better than expected. Japanese data better than expected. Okay, so that's potentially bullish. Then in the morning we started off with French consumer confidence better than expected. Italy was obviously a bit of a party pooper, okay, which generally always is. Okay, the Italians, fortunately, as we all know, a bit like the Chinese in terms of their data, it's all corrupt and not something that we can really trust. Excuse me, I'm taking day nurse. I'm still recovering. Okay. Well, it's night nurse now. Okay, so basically we had that. That's the situation that we obviously were dealing with. So you had stronger European data coming out in the morning. Overall, French data good, German data good, and that's what really matters. Really, Italian data can technically be ignored. Okay, and Chinese data obviously good as well. Okay, so that then is in theory should potentially negate the bearish factor or the bearish cloud from the actual market itself. That wasn't the case. Okay, unfortunately, as you already know, my previous video I was looking for a bullish move, and obviously that permeating through. Unfortunately, that didn't last. We did have a bit of a bounce up to around the 430 level, and then obviously we sold off quite sharply. The market sold off en masse thereafter. Okay, from half 8 onwards, and we sold off here. And we managed to come into this support zone. Okay, obviously once we came into that support zone, we had a lot of other data out. So what made matters worse was the UK obviously market CIPS UK composite PMI and services PMI and composite PMI that came out worse than expected. So that obviously exacerbated the sell-off until obviously we had the US data, and obviously that then obviously exacerbated sell-off as well, again later on. Okay, so then the market started to move because we had a report out with regards to QE and the potential of QE, and we had pro-QE comments coming out with regards to the marketplace itself. Commodities were potentially putting in a base. Aussie and Kiwi were starting to move higher, and the yen pair started to project higher as well. And as you can see here, once we built a base, then the market's moved higher. Now that base there around the 6340 region is coincides with the Fibonacci retracement of 61% and horizontal support. And obviously you can see here horizontal support here. Okay, so that obviously coincided with that. And also if you look at a 60-minute chart, your previous resistance equals support, and you can see here how the market bounced. Okay. And I know you also had a lot of other sectors. I mean, you could look at the telecom sector, you could look at the oil sectors, you could look at retail sector, you could look at mobile telecoms, etc. They all were coming into support, and all the key stocks such as BP and Shell, etc., all coming into support, because you did have an article regarding Saudi Arabia raising their oil price for in Asia, or potential gasoline price, or some sort of news regarding their oil price being raised. So that was being potentially considered bullish. And as we know, if stronger European data comes out, so stronger European data, stronger Chinese data and Japanese data overnight, and obviously talk of QE in Eurozone, and given the fact that sterling and obviously the euro have dropped quite considerably, the euro is now currently trading at 1.187 and the sterling is trading at 1.51. These are all potential bullish scenarios, okay? Because obviously exports start to rise, and hence the reason why it's considered to be bullish. Okay, that's how we basically interpret it. Okay, and that's why the FTSE itself, once it had based, started to move higher with ferocity. Okay, as you can see there, and this move lasted quite. I mean, it's almost 100-point short squeeze higher. Okay, until we got to this level here. And then the market obviously failed and started to reverse quite substantially. If you use your Fibonacci retracement here, you take the pivot high from here, take it to the pivot low, and we retraced exactly 38 to 50%, and then the FTSE started to reverse quite powerfully, as you can see here. Okay, so now the question is, in the daily chart, have we obviously put in a base? From my perspective, it's basically stronger European and Chinese data versus weaker US data. Now the ISM data out of the US obviously came out pretty weak, and obviously that caused the sell-off, and the sell-off did exacerbate onto the US markets, and that certainly doesn't bode well there. And I'll discuss exactly what's happening with regards to the US markets in a different video. And that's basically where we are, folks. Okay, so quite a substantial sell-off here. From my perspective, the FTSE certainly has legs. I mean, the oil price has fallen to 47.8. It's all about stabilizing at this level now. If we could stabilize at this level, then the FTSE certainly has a chance to move higher. And this daily chart indicating that 61% is holding as support, 6380 level. That should technically hold as support. I mean, we are into the 6380 at present as we speak. In the futures, although the futures did drop as low as 6330 or 6320, if I can recollect correctly, so which is not exactly a bullish sign. And that certainly needs to be looked at as well. I think we went as low as 6330, which is potentially the pivot low here. So again, that needs to be looked at. Okay, if you go to a 10-minute chart, you can see here. So this zone here around the 6330 level will be solid support. If you use your Fibonacci retracement, you take the pivot low here, take it to the pivot high, and 675% is the 6360 level. So 6360 potential stop below the 6330, and we should technically move higher, provided, like I said, the oil price stabilizes. Okay, now let's have a look at the FTSE 250, the FTSE all share. Sorry, obviously you can see here potential downturn. Let's just connect these highs here, see if we can get some sort of trend line going. And obviously that is obviously being respected. Let me draw that correctly, sorry. That certainly is being respected from what I can see. Okay, and that's basically where we are. Just connecting the highs there. Okay, that's going to be interesting as to see what happens with regards to the FTSE AM. The FTSE 250, we can just quickly observe the FTSE 250. Now, my concern, well, the only situation or issue I have with regards to being bearish in the FTSE 250 is the drop in sterling. That should technically still maintain the bullish bias on the FTSE 250. So from my perspective, given the fact that you got a potential golden cross looming as well, but the 50 MA crosses over the 200 MA, I'm still bullish on the FTSE 250. The FTSE volatility index, obviously we did potentially come up to this resistance zone here, but the daily chart certainly has put in a potential doji now, so this move higher here has exhausted. And given the fact that if I look at the volatility index and look at the pivot, you're into the 61% finding resistance, and you are into that trend line resistance. So from my perspective, this is into resistance. The volatility index is into resistance, the FTSE is into support. Therefore, I will be a bullish on the FTSE going into tomorrow, given the fact that the volatility index is anywhere between the 22 to 24 level, and that certainly supports my argument there. Now, with regards to oil, I mean, currently this chart hasn't been updated, but you'll see oil is probably around the $46, $47 level, and again, that does come into horizontal support. So again, there is a strong argument for oil to potentially bounce from here now, and we are coming into a lot of support, just slightly below, anywhere around the 46 to the 44 level. Again, will be solid support, and as we all know, if oil comes into support, then that generally means that the FTSE will come into support as well. So as a trader, you wouldn't like to be short the FTSE now coming into this zone. Okay, anywhere in this zone is all acting as support, all these potential multiple support levels. Okay, there's definitely some support around this region as well. Even at the 50 there's a hell of a lot of support now, but 46, 47, massive support. So given the fact that we've dropped almost 50% or more than 50% now, potentially even 60%, there is a powerful reason for a short squeeze, given the fact that all those individuals that are short are looking to get out. Okay, and that will obviously create a short squeeze, and that will cause the FTSE to move higher from my perspective. Okay, now I can't carry on. I mean, we can look at the FTSE 350. Again, the FTSE 350 is coming up to the 61% previous horizontal support, and obviously that again will confirm the potential support and resistance as well. 60-minute chart you can look at as well quickly, have a little glance with regards to that. So, I mean, again, it's finding support at previous resistance equals support. So the whole issue here now is, okay, we have lower lows and lower highs. Can we potentially put in a higher low? So can we put in a higher low, and can we actually reverse and move higher? And that's basically going to be the question. And from my perspective, yes, but there are some issues on the US markets, and obviously I'll have to see how Asia trades, and then I'll have to react accordingly. Okay, although I was surprised with regards to the sell-off in the Nasdaq. The Nasdaq has come to double bottom, so I'll see exactly what happens with regards to that, and then I'll have to react accordingly as well. So realistically, if I sum up today, Grexit phase, I think that's majority of that has already been priced into the market now. From my perspective, Grexit phase certainly have been priced into the market, and certainly overdone. I think the sentiment has gone to over bearishness. Okay, extremely bearish. So given the fact that Greece realistically is playing a chicken with Germany, it's claiming that it wants to write off its debt and leave the eurozone, but from my perspective, I think it's just trying to call Germany's bluff, and vice versa in terms of Germany as well. Hence the reason why they said over the weekend there were mixed messages out of Germany, stating that okay, they're ready and prepared for a Grexit, and they're not really overtly concerned because their firewall is in place if that were to occur. So you can see that there's a lot of rhetoric on both sides, increased rhetoric on both sides, but will they actually leave the eurozone? No. Okay, I don't think that's going to happen. Okay. Right, it's all about QE now, and I think we do have a Fed meeting tomorrow, so again that will dictate things. Okay, with regards to the market itself, I think the Fed meeting starts tomorrow, so that's going to be very interesting. Or there's a release of the minutes of the Fed, so that's going to be very interesting. And we also have a certain Fed Evans speaks tomorrow as well, so we'll see exactly what happens with regards to the markets tomorrow. Now we do have a lot of data coming out overnight. You got consumer sentiment from China overnight. We have German retail sales that are going to be very interesting tomorrow morning. You've got construction PMI, unemployment data as well, and obviously Eurozone retail PMI, so that's going to be interesting. So a lot of European data tomorrow, and we'll see exactly how the markets react. So at present, my inclination or my bias right now is currently potentially bullish, given the fact that obviously if oil starts to stabilize around this 47, 46, 45 level, which there's a hell of a lot of support, okay, so I provided that support holds and we don't continue to obviously slide, given the fact that European and Chinese and Asian data was strong, which technically neutralizes the weaker US data, which I think the market's overreacted to. Okay, on the downside, given the fact that weaker data technically should force the Fed to obviously delay rates, and that obviously is considered good news. So again, you could put a lot of spin on things, and you could look at the markets from a different perspective. And good news is bad news, bad news is good news. But again, that's all open for debate. I think this sums up this video. So risk on, risk off, wax on, wax